Hey guys, welcome back to the channel. If you're new here, I'm Tristan, creator of chartinspect.com, where I've built over 200 plus on-chain metrics to help you understand what's actually happening in Bitcoin. We look at on-chain data and make sense of what's happening with holder behavior, market cycles, and how much profit or loss Bitcoin holders are experiencing, etc. Today I want to talk about something that I've been thinking about a lot lately, and it's a bit of a different video than I normally do, but today I want to sort of zoom out and have more of a broader conversation. And the idea is that Bitcoin is changing, in my opinion. I don't think most people realize it yet. And what I mean by that is the way Bitcoin behaves, the way it moves historically through these 4-year cycles, the magnitude of these rallies, these crashes, it's all evolving over time. And a lot of the sort of mental models that people have, a lot of the indicators and metrics that people have used to navigate the market, they were built for a Bitcoin that honestly doesn't really exist anymore, or at least it's not the same, sort of Bitcoin that I was in 2014, 2018, or even back in 2022. So let me walk you through what I'm seeing today and why I think this matters for how you should be thinking about 2026 and beyond. If you've been in the space for like any meaningful amount of time, right, you've probably heard the stats about Bitcoin crashes, and these numbers get thrown around a lot because they're pretty dramatic, right? So Bitcoin obviously crashed or about like 90 or 93% from the 2011 top. It crashed around 85%, I think it was, after the 2014 top. And in 2018, it crashed around 84%. And most recently, it crashed around 77% from the 2021 all-time high down to the lows in late 2022. And so the common expectation, the thing that's basically baked into a lot of people's sort of mental model at this point, is that Bitcoin crashes somewhere around 70 to 80% in bear markets, right? That's just what it does. That's the assumption. And if you go on Twitter or Reddit or whatever, when Bitcoin starts to have this inevitable drop lower, you'll start to see people talking about buying Bitcoin at 30,000 or 25,000, because that's what an 80% crash would look like from the 126K all-time high we saw in October. But each cycle, the drawdown is obviously getting smaller, right? We know this. The crash is less severe than the cycle before it, right? So it's not a huge difference from cycle to cycle, right? But when we're talking about going from 85% to 84% to 77%, but over time that trend becomes more significant, right? And when you think about why this is actually happening or might be happening, it actually makes a lot more sense. So in 2011, Bitcoin was obviously a completely different animal than Bitcoin is today. Back then, you could probably count the number of like serious market participants on two hands. There was no institutional infrastructure. There were no regulated exchanges, really. It was like the Wild West, right? So in that environment, yeah, you're going to see these 90+% crashes because there's no floor. There's no one to catch, the sort of falling knife, as they say. So fast forward to today, Bitcoin's market cap is in the trillions now, right? I think it was like 3 trillion or 2.5 trillion. We have spot ETFs in the United States that hold, hundreds of billions of dollars in these assets. You have companies like Strategy, formerly MicroStrategy, holding over, I think it was 700,000 Bitcoin on their balance sheet. You have more and more of these sovereign funds and pension funds starting to accumulate and more Bitcoin, right, allocate to this asset class. The infrastructure nowadays is totally different. And out of all of these things, the ETFs, the corporate treasuries, this sort of institutional participation that we've seen recently, and most recently in 2024 and 2025, that sort of acts as a floor, in my opinion. Now, I do want to be clear about what I mean by that. So they don't prevent sort of these bear markets, in my opinion. We're clearly in a bear market right now, and price can still go down significantly. But what they can do is sort of dampen the severity of these drawdowns that we've seen. They create, a sort of bid that didn't exist before, like, for example, in 2011 or 2014 or 2018, that didn't exist before, right? When Bitcoin was crashing in 2018, there was really nobody stepping in to buy at scale. Retail was panicking, right? A lot of institutions were actually shorting the market in early 2018. You have BlackRock's ETF, you have Fidelity, you have companies with these massive Bitcoin treasury strategies. And so these entities like Strategy aren't gonna panic sell when price drops 30 to 40 to 50%. In many cases, they're actually going to be buying more, right? That changes the sort of dynamic that we've seen in prior bear markets. Now, obviously, we won't know for certain in hindsight, but clearly, logically speaking, we can tell that this cycle is different in some ways from the previous cycle. And if you disagree with that, I don't know what to tell you. Like, it's quite clearly different in that the asset class as a whole has clearly developed more into society. In fact, I would go as far to say that Bitcoin is becoming the thing it once hated, right? Traditional finance, which personally I find, concerning, but I digress on that. So if this sort of trend of diminishing returns and diminishing drawdowns continues, and I think it will, what does that mean for this cycle, right? So let's do the math real quick, some mental math. If we have a 70% drawdown from $126,000, that would put us at about 40,000. I think it's like 38,000. A 65% drawdown would be about 45,000. A 60% drawdown would be about like 50,000, and a 50% drawdown would be from 126K would be around 63,000. Now, my personal expectation for this cycle, and this is just my opinion based on looking at the data, is somewhere in between a 50% and a 65% drawdown. So roughly $45,000 to $65,000 for a potential cycle bottom. And I know that might sound almost bullish coming from me, but if you've been watching the channel, I've been pretty bearish on 2026 for since I started my channel. And I am still bearish. I think we have more downside ahead. I think the rejection we just saw at the short-term holder cost basis at $98,000 was significant. I think we spend more time at lower prices than higher prices this year. But there is a big difference between being bearish on the sort of directional bias and being bearish on magnitude, right? I do think we're going lower. I don't think we're going as low as the historical 70 to 80% drawdowns would suggest for Bitcoin's historical drawdowns. And I do want to be honest with you because I could be completely wrong on this. Obviously, if we get a major recession, like a real recession, not just like slowing growth or slowing GDP or anything like that, that could change things. If something breaks like globally in the financial system, obviously if there's some kind of black swan event that nobody sees coming, we could definitely see a deeper drawdown. Macro, does matter. It always has. And but in a baseline sort of scenario where we just have a normal bear market, normal crypto winter, I think the bottom is going to be much shallower than previous cycles. That's sort of my base case. Something that I also think is really important, and it's not something I see people talking about a lot, is that a lot of the on-chain indicators that we use, that I use, that everyone uses in this space, that these metrics that were created back then were created for a Bitcoin that crashes 80 to 90%. The thresholds that we use to define sort of extreme fear or generational buying opportunities or capitulation, those sort of thresholds were set based on how those metrics behaved historically, right? In 2014, 2018, 2022, it was based on those visual elements that these creators saw when they developed the metrics mathematically, right? So if you think about a metric like supply and profit and loss, for example, we've talked about this metric a lot on the channel before. At previous bear market bottoms, supply and profit drops to around 50% or even lower, sometimes 40%, right? And so many people included, or many people, myself included, look at that and say, okay, when supply and profit and loss gets down to 50% or below, that's historically been a good time to buy. That's capitulation, right? So, but right now, supply in profit is still around, has hovered around, 60 to 70% recently. And so the question is, what if it never gets to 50% this cycle? What if the bottom happens at, say, 55% or 60% like we saw back in 2019? So what if that happens? A lot of people could be sitting on the sidelines waiting, for that 50% reading, waiting for the same signal they saw in 2018 or 2022, and it just never comes, right? Meanwhile, Bitcoin, starts to bottom and potentially sees a recovery. and they missed it because they were using a threshold that was calibrated for these earlier, bear market bottoms, these earlier, crashes that were 80%, 75%. So if we look at another metric such as the NUPL, net unrealized profit and loss, at previous cycle bottoms, NUPL dropped into this deep capitulation territory, this deep blue territory. But every single cycle, we've seen diminishing losses on this metric as well, just like we have seen in Bitcoin. In the early 2011 cycle, we got down to below 100, negative 120%, 140%. The next cycle, we got down to around negative 76%. The cycle after that, we only got to around 45%. And the cycle after that, only 25%, around 30%, right? And this is a log scale. If you look at a linear scale, which isn't working right now, but yeah. So basically, if you're waiting for those same readings, you might be waiting for something that never happens, right? Or if you look at MVRV, for example, another metric that's extremely popular. If you look at MVRV, the classic sort of signal is MVRV below 1, which means the sort of average holder is underwater, right? In previous bear markets, MVRV got way below 1. So for example, in 2011, it got down to around 0.47. In 2015, it got to around 0.57. 2018, 0.7. And then in 2022, 0.82. So what if this cycle MVRV only drops, for example, 0.9 or 0.85 because the crash is shallower? That's still, a good buying opportunity historically, but doesn't look as extreme on the chart. So this is what I mean when I say the indicators haven't caught up to how fast Bitcoin is changing. The market is maturing more than the tools that we sort of use to measure it. So if you're waiting casually for the exact same signals that have worked in previous cycles, you might be setting yourself up to miss the bottom. So does that mean on-chain data is like completely useless? No, I absolutely think it's not useless. I think it's very valuable. And obviously I built an entire platform around it, but I think you have to use these metrics with the understanding that the extreme readings we saw in the past might not repeat, right? The principles still apply, right? Accumulate during, when short-term holders are capitulating or long-term holders are purchasing, selling when euphoric conditions occur, obviously, when holders are euphoric. But the specific, thresholds of these indicators might need to be adjusted a bit, sort of in your own mental, headspace. So I want to sort of shift gears a bit and talk about my sort of long-term perspective here, because I do think it's easy to get caught up in the short-term, doom and gloom. And I've been sort of contributing to that. I've been making pretty bearish videos recently, but I think it is important to zoom out sometimes. So if you look at Bitcoin's, performance over any 5 to 6 year period in its history, any sort of 5-year period, it's been positive, right? Sometimes massively positive, and this includes buying at what felt like terrible times. If you bought Bitcoin at the peak of 2017 in the bubble, the absolute worst time, $20,000, $18,000, and you held for 5 years, you were still up significantly by 2022, even with the bear market that was happening at that time. Obviously, we're in loss a little bit in 2022. And if you held until now, you're obviously way up, right? So the people who got wrecked in Bitcoin historically aren't the people who bought and held. They're the people who used, these 10 to 20%, 20x leverage and got liquidated, right? They're the people who panic sold at the bottoms because they couldn't handle the drawdown, emotionally, even though Bitcoin has obviously experienced inherent volatility. If you just look at a linear chart, you can obviously see that, right? And so they're the people who tried to, sort of trade every swing and sort of got chopped up, right? So if you just bought and held with a multi-year time horizon, 5 years minimum, in my opinion, Bitcoin has and will continue to be, in my opinion, one of the best performing assets you could own, right? Despite all the crashes, right? Despite all the bear markets, despite all the times that people declared Bitcoin dead. And I don't see a reason why that changes going forward. The fundamental thesis is still intact. Bitcoin has this fixed supply, right? Increasing demand over time from institutions and individuals, growing infrastructure, improving regulatory clarity. The sort of long-term case for Bitcoin hasn't changed just because we're in a bear market, right? So when I talk about looking for a bottom in mid to late 2026, like I've talked about in my previous videos, I'm not saying you need to catch the exact low. Nobody, can catch the exact low. Even the best traders in the world can't. So what I'm saying is that if history is any indication, right, accumulating during these periods of fear and negative sentiment, during bear markets when everyone thinks it's over, that's been a winning strategy over and over again, right? The 2018 to 2019 bear market felt terrible. I remember it. Bitcoin, people were demoralized. The narrative was that crypto was dead. It was a fad. It was never coming back. But the people who accumulated during that period, even those, it lasted a very long time. It was very grueling for some people, and me included. They did incredibly well when the next cycle came around, right? Same thing in 2022 after FTX collapsed. Sentiment was as bad as I've ever seen it. Bitcoin at $15,000. Everyone was calling for, $10,000 or lower on Twitter. Mainstream media writing, these bearish articles, and that turned out to be the bottom. The people who bought during, accumulating during that period, like me and many other people did, are sitting on, massive gains even now with the recent pullback. So I do think 2026 is going to be similar at some point during, this year, probably in the middle or latter half of the year. Sentiment is going to be really bad. People are going to be, demoralized. The narrative is going to be negative. And that's probably going to be a good time to start accumulating if you have a multi-year time horizon, if you believe in the long-term thesis for Bitcoin. I'm not saying go all in tomorrow. Timing does matter to some degree, obviously, especially after, the rejection we saw at $98,000 at the short-term holder cost basis. But I am saying, don't let the bear market sentiment cause you to lose sight of the bigger picture. Bear markets are where the real money is made for long-term investors. That's when, you start to get to accumulate at these lower prices. And then bull markets are where you sort of realize those gains. And so one more thing before I sort of wrap up on this video, and it's sort of related to everything I've been talking about. So Bitcoin's volatility is compressing over time. In other words, the standard deviation of the price. And I think this is sort of underappreciated in the market recently. In the early days of Bitcoin, for example, you could see 20 to 30%, maybe even 40% moves in a single day, right? That was just normal, right? Back then, the market was tiny, liquidity was thin, and the price could swing sort of wildly on any given day on relatively small amounts of capital, right? So nowadays, however, a 5% daily move feels like a big deal. We have days where Bitcoin moves 2 to 3%, and people are starting to freak out on Twitter, like we're starting to become the stock market. Like, what the heck? The volatility profile has sort of changed. And if you look at the data, the annualized realized volatility, it's been on a downward trend over time, right? There are still spikes during major events like we saw in November, but the baseline volatility of volatility is lower than it used to be, right? The market is sort of calming down as it matures over time. So this has obviously implications for both the upside and downside, right? On the upside, we're probably not going to see those 20x returns in a single cycle anymore, like the early days. Those days are gone, in my opinion. The market cap is just too big. But on the downside, we're probably not going to see these 90% drawdowns anymore. The range is sort of compressing on both ends, right? And again, I think this, this feeds back into what I was saying about the indicators. A lot of the volatility-based, indicators and models were built assuming the old, sort of volatility regime, right? If the volatility regime has changed, and I think it is and continuing to change, then if you think about it logically, right, the outputs of those models might not be as reliable. So if you're looking at a model that says, buy when the 30-day volatility spikes above X%, and that threshold was set based on the past, 10 years of data, you might not see that threshold hit again because the baseline volatility is just way lower now. Does that mean Bitcoin is becoming, boring? I think, maybe a little bit compared to the older days. We're not going to see those crazy, 100% runs in a single year, that we used to see. But I actually think this is good for long-term adoption. Institutional investors like pension funds or endowments, or if you look at sovereign wealth funds, they can't really invest in an asset that drops 90%, but an asset that drops perhaps 30 to 40%, in a worst case bear market, 50%, that's actually, pretty manageable, right? That's in the range of what, equity drawdowns can look like in severe recessions. So sort of the volatility compression is actually enabling, this broader investor base to sort of participate, right? Which creates more demand, creates a higher floor, which can sort of lead to these shallower drawdowns. It's sort of like a self, reinforcing cycle. So short term, just to wrap the video up, my view hasn't changed, right? I'm still bearish overall. I think the $98,000 rejection at the short-term holder cost basis was significant and will continue to be a line in the sand that I think is important to watch as we go deeper into 2026. I think we are in a bear market, and I think we have more time to spend at these lower prices this year. The on-chain data we've been tracking, the negative momentum, the demand from whales, the distribution from these larger holders, all of that still points to lower in my view. But ultimately, where I think how I think about this bear market, where it ultimately bottoms, I'm expecting somewhere in the 50% to 65% drawdown range, around $45,000 to $65,000, which actually does correspond to the realized price at $56,000, and in between the the true market mean and the realized price. I don't think we will see prices going down to lower than the long-term holder cost basis, such as going below $30,000, $20,000. Like what? I don't think that's gonna happen. Shallower than what the historical 80% drawdown, 70% drawdown would suggest, right? And if I'm right about that, a lot of people are gonna miss the bottom, in my opinion. I think they're gonna be waiting for these lower prices or some of these metrics to go lower, waiting for supply and profit and loss to hit maybe perhaps lower than 40%. And so waiting for the same signals that worked in 2022 and 2018, and those signals might not ever come because the market structure has inherently changed. Like we've talked about, Bitcoin is maturing. These drawdowns are getting shallower. The volatility is compressing. The institutional floor is real, in my opinion. And this isn't the same Bitcoin, that crashed 93% in 2011. It's a different, asset class entirely now. And I think the people will understand that, the people who update their sort of mental models to reflect how the market is evolving, they're going to be, much better off, much better positioned than the people who are rigidly applying these sort of frameworks that have worked in previous cycles. So for me, the plan is to stay patient during 2026, watch the data, watch these on-chain metrics, but also understand, that these thresholds might be different this time. When we get into this, mid to later part of the year, and prices are sort of starting to get depressed and sentiment is bad, that's when I'll start to be looking to accumulate more aggressively for this upcoming cycle and throughout the bull market that I think will occur in 2027, all throughout 2028. And so that's when I'll be, looking to more accumulate, aggressively. So if you're holding Bitcoin within a 5 to 10 year long-term, horizon, this period that we're in right now, it's obviously noise to you, right? If you're a longer term, investor, obviously it's uncomfortable, painful noise, but ultimately it is just noise in the larger context, of Bitcoin's history. The long-term, trajectory of Bitcoin hasn't changed just because we're having a bear market year, right? So that's my view. I know this is a bit of a different video, more philosophical, less focused on, these shorter term targets. But I think it is important to sort of step back and look at Bitcoin from a longer term perspective, sort of looking at the bigger picture. Do let me know what you guys think in the comments. Do you think we're gonna go see a shallower drawdown the cycle? Do you think I'm wrong? Anything can happen. Obviously, I'm genuinely curious about what you're thinking. So drop a comment below. If you want to track any of these metrics that we've discussed on the channel so far, you can check them all out on chartspec.com. Join the Telegram community if you haven't already. Link is in the description below. Thank you guys for watching, and I will see you in the next one. Bye.